Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer the question, what is the 10% IRS penalty on annuities? Okay, so the IRS has this penalty if you take from your retirement account before age 59 and a half. Annuities follow those same rules, whether that's a non-qualified annuity or a qualified annuity. And basically what it means is if you withdraw from these accounts, you're going to get a 10% penalty from the withdrawal until you reach, for every withdrawal until you reach age 59 and a half. Okay. Once you get past 59 and a half, that 10% IRS penalty goes away. So if you got a qualified annuity, you're going to get a 10% early withdrawal penalty on the entire withdrawal. With non-qualified annuities, it'll just apply to the gains. And when you're taking a withdrawal from an annuity, it's coming out LIFO, which stands for last in, first out, meaning the interest will come out before your after-tax money, right? So if you've been deferring your annuity for a while and you've been earning interest, you're going to get that 10% penalty on those gains that you've been earning up to that point of taking the withdrawal. Okay, so what are some ways to get around this? Number one, you can do a 72Q for a non-qualified annuity, and you can do a 72T distribution for a qualified annuity. And basically what the rules are is you could take a fixed amount determined by the IRS for 5 years or age 59 and a half, whichever comes later. Okay. So let me give you an example. If you're age 50 and you decide to do a 72T distribution, you've got to take this fixed payout every single year until you turn age 59 and a half because it comes later than 5 years. And if you take any more than that 72T distribution, you're going to get a 10% penalty on all the withdrawals, from that point, going back to day one of taking the distribution. If you cancel it midstream, same thing. You're going to get a 10% early withdrawal penalty on all those withdrawals you've taken up to that point. So you have to stick with the plan. It's all in or you don't do it at all. Okay. If you have the ability to do the exercise, the rule of 55, where you separate from service, you may be able to go beyond this 10% early withdrawal penalty. My recommendation, talk to your tax accountant. If you're using some tax accountant in a box scenario, I would recommend paying $500 to a CPA to let you know whether you can do the rule of 55. Or if you're planning on doing any sort of like, hey, I'm trying to skirt the 10% IRS penalty, pay the money, talk to a CPA and let them tell you what the 72T distribution is or the 72Q distribution. We can do it here at the Annuity Expert. We like to mitigate risk for consumers. So we always say, hey, go to a tax professional as well, just to get the green light. Okay. It might cost you $500, but $500 is better than taking 10% off of a massive withdrawal. Okay. All right. What are some other ways? Well, if you got cash, you can fund a life-based SPIA. That's a life only or life with period certain. And it'll pay you an income for the rest of your life. And because it's annuitization, it skirts the 10% IRS penalty. We just recommend that you get you don't have to do this, but we strongly advise doing this, is to get a cheap life insurance policy to match the investment amount for the SPIA, so that if you get hit by a bus, there's some sort of tax-free lump sum death benefit going down to your beneficiaries. And you're not in a scenario where the insurance company keeps your money. So for example, let's just say you're successful and you want to take $1 million and you want to put it into a SPIA because you want a contractually guaranteed lifetime income foundation. Well, you may be in a pickle where you put that $1 million in, and if you get hit by a bus in year 5, the insurance company keeps the rest of the money. Your beneficiaries aren't going to be happy. So go get a 20, 30, or 40-year term life insurance policy for $1 million. And then this way, you get the lifetime income, and when you die, it triggers the life insurance proceeds and will go down in a tax-free lump sum to your beneficiaries, and everybody's happy, and you skirt the 10% IRS penalty. I hope that gave you some ideas. If you got any questions, leave it down in the comments. I'll answer it over the next couple of days. Like, subscribe, and if you need an annuity quote, come over to the Annuity Expert. If you're wondering a dollar amount, hey, how much am I going to get dinged on, even though I don't want to do these methods, you can come over to our website, the Annuity Expert, use our calculator, come down to the retirement taxes and penalties calculator, and then you can just plug it in. Hey, I'm 45 years old. I'm gonna withdraw $100,000. My tax bracket is 24%. State income tax is 8%. And then you can hit calculate, and you can see here penalties is $10,000 from the IRS. You're gonna pay $32,000 in taxes, and then your net withdrawal is going to be $58,000. That's a woof. That's a massive hit. So come over, take a look at it. It's free. You don't need to put your email in. And if you got questions, you can call us as well at 770-755-1565. See you.